Today we're going to do a technical analysis on a ticker that you may be surprised by, but we're going to do it regardless. It's ticker AMC. Make sure to hit the red subscribe button. Now AMC is the chain theaters that is globally known. They have expanded in Saudi Arabia during COVID-19 and they look to grow every year. The CEO is currently working with the apes, the die-hard diamond holders. That is a very positive thing. The CEO knows that these diamond apes, they resurrected this company pretty much from abyss. It was being shorted by hedge funds. However, despite that, Wall Street bets and the diamond mentality, new generation investors, they decided to buy AMC and hold it no matter what. Now, I'm not going to talk about option trades because options on AMC, it can make or kill you instantly and it is very risky. However, I'm going to talk about holding shares and why you should do so, especially based on the chart analysis, looking at previous patterns. Now, this is a short squeeze in the making, and in order for a short squeeze to occur, you need time. You need a lot of bullish sentiment. You need progressive CEOs. You need a symbol of hope. And we got everything. I'm going to break it down for you. This is a psychological stock. AMC requires a lot of mental fortitude. You have to tell yourself, despite the volatility, you will continue to buy the dip and hold. You will know when to sell. When the squeeze occurs, you'll see Uncle Joe in the bar talking about AMC. When everybody in the world is going to talk about AMC, that's when you know the squeeze has started and you should be ready to sell. Right now, everybody's not talking about AMC. Because why? It's very volatile, it's shaky, and people are scared. Now, if you're scared, this stock is not for you again. You have to have mental fortitude beyond imagination. This is the next generation of investing. It is beyond your previous ideas, beyond your previous technical analysis. It's beyond any of that. Now, with that being said, let's look at the chart. Yes, from $2, it did run all the way to $70. That is a mini squeeze. However, according to Dark Pool and the hedge funds shorting it, they still have a lot of naked or imaginary shares purchased in order to bring the stock down. Eventually, if there's a lot of people holding the stock down, no matter how hard they try to short it, it will not go down, and therefore they will be forced to buy back these shares. That is what is going to propel the short squeeze. Now, AMC previously, I'm going to go to the charts and I'm going to try to slowly break it down for you, all right? You'll notice that first it went from $2 all the way to $17, $20, right? That was a huge major indication. We did not have a inverse signal. That means that it just was a huge sell-off. But according to the technical analysis, there was no head and shoulder that's saying, hey, it's going to go down. So eventually it found bottom at the $5 region, slowly trickled up all the way to $14. Notice this trend I'm going to show you. $5 to $14, then it went back down, found a base of $8 to $9. This was the major buy point, $8 to $9 for AMC. If you're holding around $8 to $9 and you continue to hold, props to you, my man. You have done it. All right, this whole COVID-19 era, you have done the most best thing you could possibly do for your family, for your future. Now, $8 to $9. Now imagine you didn't get in. Do you still have a chance? Now this is why you're watching this video. If you like this content, make sure you subscribe and hit the red notification. Anyways, so $8 to $9 was the entry point. There was a cup and handle and it broke out all the way to 70 plus. Now many people did buy on this dip at $50. However, that was premature of a purchase. What you have to do now, if you're in AMC, is to average down. Keep buying on these beautiful prices. Right now, it went all the way to 70 and went back to $30. $30. Notice the institutional average by BlackRock and Vanguard, and many other institutions, in fact. But look at the number of shares BlackRock and Vanguard is holding. At $33 average, they have over 40 million shares each. That is a huge amount of money. A huge amount of money. Why would BlackRock and Vanguard, two of the biggest institutions in the world, buy AMC at an average of $33? Think about it, guys. Exactly. If AMC is not worth so much, why are they buying it at such a high price? Right now, as you're watching this video, the price of AMC is $40. That is only $7 higher than the institutional average. And I'm going to tell you, look carefully at the chart and you're going to see beautiful patterns. And these patterns usually repeat. In order for this squeeze to happen, we need time. We need more time and more sentiment. Recently, if you look at the news that came out, the CEO of AMC decided to say, hey, we would like to incorporate Dogecoin in our future transactions. Dogecoin is known to be pushed or pumped by Elon Musk, the Doge father. If you notice more carefully, AMC CEO's tweet, he got a like from Elon Musk. Now, these are all signals, signs that, hey, something big is about to happen. If you look deeper, I'm going to look into another video later, but if you look at Dogecoin chart, it's very similar to AMC. So whether you're in Dogecoin or AMC, you're still good. But we're focusing on AMC right now. So with that being said, everything is coming into a synchronization. It's a synchronized pattern. The world is moving the market in a similar way. Specific money is being pushed in a very particular location. It happens very, very short-lived, and it happens in history once in a blue moon. Tesla was short squeezed. You can look up some of these stories where you see a short squeeze is occurring. However, this short squeeze has not occurred yet, guys. Because why? We are still in COVID era. We still have the diamond-handed apes. We still have a lot of shorting going on. Now let's look at the chart. If you compare this first rise from $20 all the way down to $5, you'll notice a similar pattern from $70 all the way to $30. A huge rise and a huge sell. It went and formed a inverse head and shoulder. If you notice the pattern here on July 20th to August 20th, this is a 1 month span where the inverse head and shoulder formed. This is a huge, I repeat, huge inverse head and shoulder. It rose all the way to 50 to plus. This was actually a sell signal. You're supposed to sell at this signal, but if you did not, that's fine, because a similar thing happened in the past. Likewise, if you see this, it went previously from $5 all the way to $14. It was overbought. It was two bull flags over one another. Likewise, right now we had another bull flag, which was a head fake. This was a head fake, and how did we know it was a head fake? You'll notice specifically at the volume. And the volume for the past run for AMC, the run from August 24 to September 14, it had very low volume. Similar to the volume of the run from $5 to $14. When you have low volume, that means that not everybody in the world is on it. Everybody is not trading the stock. Everybody's not buying the stock. It is a very select few that is buying the stock and pumping it up, forcing retail investors to panic buy. What happens eventually is they dump the shares. They dump it or short it, and they have immediately forced these panic buyers to panic sell. Right now, you are in a psychological battle. You are not in the stock market in the normal stock. This is a psychological war. I am trying to be as blunt as possible. The hedge funds are forcing you or manipulating you to be scared, to lose. They are stealing your money. They are forcing you to panic sell at this moment, especially with what happened at the Evergreen such situation with the real estate market in China. They're looking to have perhaps a foreclosure. This forced more panic selling. It had a huge sell-off. From $52, it went to $37.80, ladies and gentlemen. This was your second or third to last chance to buy into AMC. Now, I'm going to tell you why you still have some chances to buy AMC, but this was another low point, and I don't see it going any further down. It may go down to the 36th region, but that is the lowest. Now, what happens before you have an inverse of a stock? You need to have consolidation phase. Consolidation phase is when you have low volume, it's going sideways, it's not going below the support, but it's not going above the resistance. Right now, the support is around $37. It has to form an inverse head and shoulder. It is very essential. In the previous run, you'll notice that we did the same thing, $14 to $9.31. This was a panic sell. However, we have subtle rises. You'll notice that these subtle rises are the make of a short squeeze. The subtle rises are giving you indications that, hey, big investors are buying, huge investors, and they're going to buy and hold it. All you have to do is be patient. Hold. There's a real thought behind the Wall Street bets stock mentality. It's hold and hold. Because when you hold, even if you panic sell, other people panic, it doesn't matter because you're still also forced to buy the dip. Buy the dip and hold. So it would go up suddenly and then come back down. This would be the peak head of the inverse head and shoulder at $7.90. Likewise, right now we have formed a potential left shoulder of the inverse head and shoulder. If you don't know what I'm talking about of an inverse head and shoulder, please Google it. An inverse head and shoulder is a major indication of the stock market for a reversal. So this is a potential left shoulder. Now, what we have in the next few days, I see AMC hitting clearly $44, 44 to 45 as a huge resistance point. This is a potential resistance point. People will panic buy and they will panic sell yet again. Because again, we need time. We need this to consolidate for at least a month or two. We need AMC to consolidate. Once it goes and hits a peak low of potentially $36, $35, that will be the lowest point for AMC, ladies and gentlemen. Right now, we had it $37. Even if you're at $40, you're at a great position for AMC. Now, you can do some calculations and you can see where the price targets are at. Our price target is between $400 to $1,000. It is up to you where you see it. Again, you'll know when to sell when the average Joe is talking about it. The people that are saying there's no technical analysis for AMC, I beg to differ. It is repeating this previous pattern that you're seeing. The pattern that occurred from January 27 to May 27, this run within a span of about 5 months, that is the pattern that we're running right now. So right now, again, just began the consolidation phase. And around 35, 36, 37, these are ideal buy points. You will have time as it consolidates, forms a inverse head and shoulder. Once the right shoulder is formed with a cup and handle, you will know that it is going to squeeze. Okay? Now the last indication, again, I knew about the volume. Since the volume was low, I knew that it was going to come down. It was a few amount of hedge funds or institutions forcing you to panic buy. Now they panic sold. Because it's low volume, it is easily manipulated. However, when it gets in the insane amount of volume, I'm talking into the billion. When there's 500 million volume to a billion volume, which has happened twice for AMC, that's when you know the squeeze is about to begin, ladies and gentlemen. Volume is going to be your biggest indicator for a short squeeze coming. Just be patient, hold the line, and that's it, guys. Just wait a few months. Our channel is predicting January to February, the short squeeze of AMC should begin, and it should complete then. Until then, I wish you guys all the best. You don't want to be too late. You still have an opportunity to buy in, average down. If you bought in the higher prices, average down. If your average is close to $33, potentially 34, 35, 36, you are golden. All you have to do is buy more shares, continue to buy the shares. I hope I was able to help. Make sure you hit the red subscribe button for more content. This is Flash Instincts.